all the money actually gets made in the bear market.
If you're long robotics and AI, you got to be long longevity and humanity.
This thing was just like vertical.
What's overrated? Like the overrated product category.
The vast majority of my investing, if I had to put it like dollar weighted, has been in
Toughy. Boom. Welcome back to Supercycle. Today we have a special guest, Shayon, one of the investment partners at Multicoin. Welcome, brother. Welcome to the show.
Thank you very much for having me, Jack.
Shayon, you and Multicoin, you guys over the last 5-6 years have been some of the most active funds on the street. I think a lot of people have read your public theses around things like GEOD, the participation in Geodnet OTC rounds, your recent investments in Fuse. I think what's most interesting for people is you've been a huge champion for some of the unique applications of crypto. I think a lot of our listeners love listening to investors, think about how they invest, how they pick founders, identifying opportunities. But I think people know that this business is one of the individual and who they are. And so maybe we can kick off with an introduction from your side, especially targeted at where you've come from. Would love to potentially start with even your pre-adulthood. Today, as an investor for Multicoin, what's the most formative moment in your life as you were growing up you think has defined who you are and what you're doing today?
Yeah, happy to. So I grew up in New Delhi in India. I spent the first 18 years of my life there. I moved to the US for college when I was 18 to study mathematics at the University of Chicago. And I've basically been in the US since then. I currently live in New York City, which I thought for a very long time that I was going to be an academic and study pure math. I'm happy to kind of talk through like what caused that change. But growing up, I really always enjoyed games of theory and games of chance. And I always had some sort of a side hustle. Like I was really enamored by the idea of making money, and especially in ways that didn't necessarily require me to have a job. So, for the longest time, there was this pattern of 13, 14-year-olds around me trading Pokemon cards and Yu-Gi-Oh cards and Duel Master cards. And I eventually realized that I could like run what was effectively like a market making operation over that inventory. So I could arbitrage rates in one neighborhood versus another for specific cards. We used to have these like, it was effectively like county fairs. And I used to go there and buy up real estate in the fair to like run effectively a casino. We used to play a game called Lucky Number 7. Where you could roll a dice and you could have it come there. And, it took maybe 2 minutes of understanding how House Edge works, in order to understand it would be a very profitable endeavor, and it always was every year. So I'd say those were the two defining things, like really enjoying math, really enjoying games, of course, of growing up that kind of got me to my next phase, which is studying mathematics in college, where I'll kind of skip over the details, but kind of 3 years in, I had what was effectively like, I hit a wall in terms of mathematics where I realized that I wasn't probably going to be the top 10% PhD student. And then I realized I wanted to do something else. It was around that time that, some people I knew were starting companies, and that's when I started getting involved in startups. Fast forward to, working in startups with friends and working on a few of them myself. I sort of had the chance to see that Kyle was hiring at Multicoin, send him a note, but like that's kind of roughly the trajectory. Loving math, loving games, loving startups, and then investing.
5 years at Multicoin, right?
Yeah, a little over 5 years now. Yeah.
Although you came in as an intern, an analyst. What was Kyle looking for? That would have been 2020, 2021?
Yeah, so that was early to mid 2020. So
COVID year.
Yeah. So some of the backstory here is my prior startup was winding down. We were effectively trying to compete with Opendoor, which, if you're familiar with kind of high frequency residential real estate market making, like those words don't really make sense. Like, and we learned that in practice. Like that's not a business model that scales. We were winding that company down, and it was around that time that comp farming had started. Like Compound was running liquidity mining. And I'd been in and around crypto. I'd like seen roommates win and lose huge amounts of money very quickly. But like I'd always been following and been around it from a distance. And I decided like I should probably spend a little bit more time here. It was around that time that I was actually thinking of building a perp dex myself because I still think of myself, even though I've been an investor for the last 5.5 years. I think like at my core, I think of myself as an operator and a founder, even though what I do in my day job is work with founders. So anyway, I wanted to build perp dex. I was really thinking about that design space, specking things out and getting to work on it. And then I saw that Kyle was hiring and I wrote something, essentially outlining the design space for prep X's. And it seems to, I had a chance to kind of talk to the rest of the team after that. And at the time I thought I was just going to get a chance to kind of look at what the other side of the table is, what is investing like, and just get a ton of exposure to things. And then I realized that like, this is all I want to do.
So started off as an analyst, rose up the ranks over the next 5 years, saw the peak of 2021, dealt with some of the, let's say, the downward trajectory over 22, 23, and here we are in 24, 25. What drove your rapid ascent in Multicoin? I don't think that's very common for someone to go from an analyst to investment partner like that at such a large institution like Multicoin.
Not to be too academic about this stuff, but like I do think of what we do as a craft. And like I think everyone on the investment team at Multicoin considers themselves a practitioner of the craft. And, everyone does things slightly differently. But what makes Multicoin unique is that there's effectively no real rules, and everyone is given from day one as much agency as they choose. Which is not to say that like I can show up as an analyst on day one and start writing checks. Obviously that takes time and that we have a very rigorous investment, committee process. But by agency, I mean, I was able to naturally figure out the kind of things that I was uniquely good at. And I was allowed to refine the way in which I produce, like both define and refine the way I produce alpha for the firm. And so like the way I think about this is like, if you're an investor, I think the first thing you need to know is like, where do you have asymmetric edge? And at least for me personally, the way I think of my edge, or the way I articulate my edge is not necessarily, all the classic seeing, picking, winning things, although hopefully I'm good at those and continuing to get better at those. I really think of my edge as like the time that I spend with my founders and like being extremely operationally involved. I think if you ask any of the founders that I work with, you will know that like the amount of time I spend with them is very different from like the way most other investors engage. And so maybe to condense the answer, I'd say like I was allowed to, engage with my companies the way I wanted to and prove that the way I engaged with those companies was actually delivering alpha to the firm and improving the probability of success of the founders that I worked with. And that was through sitting down with them, working on product, working on distribution. And then, I was very fortunate to have been given the chance to do that in my role at Multicoin, where I was able to like work on an incubation and, see where it netted out 12, 18 months later, or write a sizable check into a company and then like really be involved in the turnaround and like be sitting in those boardroom meetings and like, restructure portions of the org. Like all of these things came from the power of Multicoin that I was borrowing. And hopefully I was able to do some good things with it.
That's a crazy way to start off your analyst journey. Like you start participating in deals and you're working alongside some of the best founders. That's crazy. I mean, I think on the super cycle, I think people want the alpha. What's, as you look back in the last 5 years, what's been, one of the top fund returners for you individually? The ones that you feel the most responsibility for or ownership on, proudest of?
Yeah, totally. And at the risk of getting like a VC brags.
This is exactly what this show is about. It's about bragging. Let's go, baby.
Very clear that, it's all
a team effort.
The founders, it's the team. We're sitting on the sidelines. Our job is to partner with the founders. I take no credit for any of this myself. One of the larger wins I'd say over my time at Multicoin has been our work in Render Network. So we first met Jules Urbach, who is the founder of Render Network, and Otoy, the parent company that builds kind of all of the core rendering client infrastructure that whole org has been working on. We met them in early 2021, and we had seen sort of different instantiations of like compute networks. They've obviously come in and out of circulation, out of vogue over the course of, even the 5 years prior to that, everything from Filecoin to Golem to, different instantiations of that. But this idea that, all of these networks are essentially a way to prove that you are doing some work and then you get paid for doing that work. In the case of Bitcoin, it's hashing. In the case of, Helium or something else, it's like proving that you move packets around. Why wouldn't that work with, arbitrary compute resources? I'd say the early innings of our thesis on compute were formed in that time where we realized that compute is not heterogeneous. It really matters what the specific workload is and how you're able to, one, aggregate the resources for completing that compute, and then figuring out how to orchestrate the workloads across all of the resources you've aggregated. And we thought that Jules and the render team had a very, very clear answer to that. One, because they actually owned the software that they were working on. Like Render and Octane were sort of they were vertically integrated in a way that no other compute network was. And so at the time, this was in early 21, this was around the time that this was actually pre-metaverse becoming a thing, and Facebook renaming the name and that entire fever dream that happened and went away. But we were very clear that there was going to be something, something material along this thesis. We wrote a fairly sizable check out of our funds into that at that time, and then worked pretty closely with the team to, one, figure out, a completely new token design because it was kind of stuck in the vestige of 2017, to bring in people who were able to kind of, as we saw later on in 23, 24, the resources that they had could theoretically be used for inference and things of that nature, figure out how to create an incentive structure and create clients that would support that as well. Essentially working on closing a ton of early customers for them to do that, essentially test out what those rails look like and things of that nature. So I'd say that was one of the more active engagements, and we still remain kind of pretty close to that team to this day. Obviously the compute landscape has changed very significantly, and our theses have also changed fairly significantly around what's important and what's valuable there. But I thought as a discovery exercise and in terms of the engagement there, it's pretty canonical. It's a pretty canon moment as an investor, I think, working on Render.
Are you more of a private stage type of investor or a public market type of investor? Is there a difference?
Yeah, I again, this sort of goes back to what is my source of alpha? And sometimes it's sort of it's kind of independent. So in Render's case, this was a public asset, right? We kind of acquired the position privately, and we also over the course of our life cycle had different, open market operations on Render as well. It's not just been that private OTC round. But what I'll say is that the way I think of delivering alpha applies both to early stage venture and to late stage public assets. Now, the vast majority of my investing, if I had to put it dollar weighted, has been in private markets because there's just generally less hair, and the configuration, the conditions for me to work with the teams that I work with are some, just inherently easier and better at early stages. That said, there are many opportunities in the public markets where we can have that degree of involvement, and we're working on a handful of those.
Tokens have enabled private companies to come to market earlier. The people who would have taken the Series D, E before the IPO, they're doing it after the A, which is incredible. And so that Render deal would have been around the 2020, 21 days, right? When you guys first initiated, that's probably one of your first investments.
Yeah. So Render, I think, got done in May of 2021. And it was also around that time that I got to do my first incubation. And it was actually more of a special situations. We worked, I don't know if you're familiar with Eden Network. Were you around there at that time? So that was one. Obviously, the story is, that there's been a lot of ink spilled on what happened around the ETH, POW to POS migration and different ways of thinking about MEV market structure. But that was a way where we were very fortunate to work with the ArcherDAO team and just be hey, let's run this experiment, let's YOLO it and let's see what happens. And, it obviously wasn't a success, but it was within 6 months of joining Multicoin that I was okay, we're just gonna launch this thing together now,
Do those long tail type incubations, do you think those work if it's not in a bull market? Right now, I suppose these type of long tail type risk on type, let's just go see what happens. In the absence of attention, it must be harder for you guys. And so you guys are looking at probably higher quality names today, right?
I wrote Crew for a hot second in college. And there was a coach who used to say races in the spring are won in the fall. which is all the money, and this has been my experience still, which is like all the money actually gets made in the bear market. Now is like the guys who are asleep at the wheel right now are not going to make money when things are, again, like depends on what your style is, right? Like if you're a delta neutral market maker and vols are like lower than they've ever been, like sure, you're not going to make money right now and you benefit from markets. I think the vast majority of people who allocate capital in the space try to do it over time horizons and have a long only bias. I would say that like, we currently have, maybe another thing that's become more interesting to me over the last year, specifically in crypto, is venture as an asset class in crypto has changed pretty meaningfully. There used to be this sort of like token factory, which is like now, at the risk of sounding crass, it's completely fucked. Like it doesn't work. You can't like raise at a price and then raise at another price and then have a listing on a major exchange. Like everyone has seen those charts, and like it's becoming very clear that like, you either have substance or you don't. And so I would make the argument that like it's even better. The conditions for doing incubations, for doing early stage work are even better for us because we believe very, very strongly in the things that we're working on. And then I'd say the other thing is like the capital structures have changed. Like instead of just doing, like a token denominated venture investment, I'd say teams today are open to way more interesting configurations, whether it's full buyouts or, we incubate something and they come on later, or, theoretically we bring on some sort of EIR configuration. Like I'm having more fun doing what I'm doing now than I've ever had before, purely because things are changing and not everyone knows like where the money's going to be. And like all this silly, like all this simple money has been essentially like markets become more efficient over time. Like all the simple, like we've gotten to the point where it's like actually hard, and like that's way more fun because like now we have a chance to like really prove over longer time horizons. You're not going to have like, 1 year, like we let the seed and now it's like worth $2 billion. That's gone. That's never coming back. But like, maybe that should never have happened in the first place, like that, maybe that didn't need to exist. So I'd say like all configurations are on the table right now, and it's all fun.
Yeah, these founders are having their EV projections re-rated at the moment, and they're trying to be more strategic, shall we say. And strategic financing is, yes, well, certainly benefits those with capital. For example, the Multicoin team. Multicoin talks much about structural tailwinds that you guys are certainly long bias, want to make bets now for the world that exists in the next 5+ 10 years, etc. You personally, what are some of the megatrends that you're most fascinated by at the moment, you're trying to make plays in, that you're excited by?
I'd say like the one thing that has become more and more clear to me every year that I've been doing this is like a very clear definition of what this technology is. Crypto is about money. And I mean that in like, just like capital M money, maybe capital all letters. Like there were times when, people looked at the space and had ideas around credible neutrality as applied to, all kinds of things. This super egalitarian view of computing. I think what we've learned now is that, the revealed preference of, the people who use these systems is to treat these systems as money and to use them in ways that you couldn't, use money prior. And so like at the risk of sounding obvious, we're just doubling down on the idea that these things are asset ledgers. And the question with asset ledgers then becomes, what exactly are you going to do with these asset ledgers? The very obvious things are payments and trading, but there are also ways, to take those core primitives, coordinate new resources and solve novel problems. And this is something that I talked briefly about and I have a blog post coming out in the next couple of weeks, around kind of like increasing the surface area of problems that you can solve through incentive alignment, which is like using this new form of money to like, pay people to solve new problems. So one broad category that I've been pretty excited about and continue to spend a lot of time on is something I call internet labor markets, which I think of as like an extension of, our DePIN thesis, which is this idea that you can create all of these new resource networks and these coordination networks by giving people tokens to, do arbitrary thing X. And, at the time, arbitrary thing X was put up a hotspot or, put up a device somewhere or like link a data center. Well, it turns out that like those are one-time static operations. You can actually, increase the surface area for that work over time. And that's kind of motivated some of the work we've done with Crunch and Fuse, which I think of as these like active contribution networks. And so I generally think that like the power of risk aggregation and like using these new capital assets to build new kinds of networks to solve problems that you couldn't, in any other configuration. I think that's super compelling, and I'm happy to chat about internet labor markets, especially as it applies to kind of AI and so, some of the more unsolved problems there. I'd say the other broad category that I continue to be excited about is I initially wrote about this in a blog post in 24 called The Attention Theory of Value, which, I think we've seen play out quite nicely over the last 18 months, is this idea that people want to trade stuff and they want to trade it in different front ends, right? Everything from Telegram bots to terminals to, things like Euphoria and, like different wrappers and different front ends for trading. I think we've, again, at the risk of sounding obvious, right? Like it's clear that crypto is useful for speculation. We've kind of been doing speculation on fairly subpar assets. Like meme coins is just like not that great. Like things that have a shelf life of 3 hours are not really that interesting for global finance. I would say there's this broad macro trend of like, things that people actually want to trade. So things like FX, commodities, equity perps, all of these things, all of that real risk in the world is going to end up on chain. And then people are going to be able to trade it everywhere. They're not going to trade it in front of Robinhood. They're going to trade it via Telegram. They're not going to trade it, they're not going to trade it on, calling up a broker somewhere. They're going to do it in, some sort of like brain rot wrapper that was designed specifically for them. And I think that, design space is like you get slightly longer shelf life assets, slightly more high quality assets showing up on chain when you can introduce those assets to people in ways that they haven't seen before. I think it's going to be huge. So yeah, I'd say the two broad theses that I'm most excited about going to 2026 are internet labor markets and just like new venues for order flow that are going to be super compelling.
Yeah, I'd love to start with the hardware side in particular. We think about DePIN. I think you and obviously Borderless have been waving that flag for a very long time. When we speak to asset managers, it seems like DePIN is just a very hard category to invest in, primarily just because of the charts. The perceived value really goes down exponentially. Why do you think DePIN tokens don't trade so well when some of them have such high evidence of PMF? I mean, even you wrote that big GEOD piece earlier this year, and I think you made $8 million investment directly on market or OTC. We'd love to break down what your thinking is there.
Yeah. So I'd say DePIN as a sector has certainly, it's come in and out of vogue at different times. I remember 23 and 24 being, super promising year for DePINs, and the sentiment around it was super popular. I've sort of spent a lot of time thinking about this and talked to obviously a ton of founders and other allocators who really cared about this sector, which is for good reason. Like when I think about like what impact these primitives, these specific coordination primitives that we've worked on over the last 5-6 years have, I very deeply believe that DePINs are going to be one of the more powerful applications of this technology to do net new things. Like it still blows my mind that Helium exists. It still blows my mind that things like Geodnet, are like just what Mike has been able to do at a fraction of the capex is outrageous. And so I'd say the bigger structural problems with the DePINs today are, I'd say threefold. One is a general emissions mechanism that may not always be in line with, let's call it like a favorable price chart. If you have time-based emissions, it doesn't really, like the expectation is that at any given, epoch, X number of tokens are going to hit a bunch of miners, and and the vast majority of them are going to go and hit market sell on them. I think countering that, type of emission schedule is very hard. Now, many of the teams in our portfolio and others are working on more bespoke ways of structuring kind of these rewards, which is shifting away from, like a fixed emissions at a given time period, but like very active measurement of like what's the quality of the work at this time, how much do you actually get paid, should you be getting paid in tokens, should you be getting paid in dollars, because it's very important to retain the contributor base, but it's also important to make sure that you aren't overly rewarding your network at a time when you don't have it. So I think you're going to see, you already are seeing a ton of teams in our portfolio reworking the emissions, but I think that's going to take some time for the market to digest. I think the second is, when you look at like a DeFi protocol like Camino or Aave, or you look at some sort of payments network, right? Like the metrics that you think of are it's very clear to understand what the business is, right? You can model Maker as a bank and, like apply a very similar multiple on kind of like what the cash flows of that entity are, what is the price to book value. You can sort of like, there are very neat and convenient ways of thinking about these things. With DePINs, there is an inherent asymmetry in terms of measuring what is the quality of the network today, pulling forward how much demand might show up 2 years from now versus how much demand exists today, knowing exactly how much of a multiple to apply to it, which is, when I look at H&T, am I modeling it as Crown Castle, or am I modeling it as T-Mobile, or am I modeling it as some combination of the two? And if so, what are the percentage of the parts? With Geodnet, am I modeling it as Trimble? Am I modeling it as Hexagon? Am I modeling it as some sort of navigation provider like TomTom? Like, what am I actually looking at this thing as? And so I think like a broader push around IR and comms is necessary. And again, this is something that all the teams in our portfolio are working on, and I think more broadly other DePINs need to do as well.
Yeah, you're talking about the market sizing against.
Correct. Which is like, how should the world think of you? Like, it's very hard for a project to go out and, wave their arms and say, look, the market doesn't understand how to value us, if you don't go out and tell the market, this is how you should value us. Right? Like the team needs to have a very explicit view of like, this is how you should value me. And maybe look, and I don't really care what it is, right? Maybe all of it is just some multiple on revenues on tokens burned or tokens bought back or something of that sort, right? But like, you should be very clear about saying that like, hey, this is what I think the value of the network should be based on what I have. Again, teams in our portfolio are making strides along this domain. So I think being very clear about like, look, these are our metrics. This is how you should think about demand 2 years from now, 3 years from now. This is how you should think about it today. And here's how I think you should price it. These are the 3 numbers that are important to my business right now. And these are the 3 numbers you should be looking at. And here's how you should think about it, right? So that whole investor relations comms motion has kind of broken. And it's partly because like, it's hard, right? Like, most people in crypto know how to value something. Again, they know how to value, a bank, but they don't necessarily know how to value a GNSS services provider that is scaling, positioning services for everyone from like people that make tractors to, Tesla, right? Like it's just a hard question to get through.
Yeah, your point is that we're trying to find incremental bidders. And ultimately, if the bidder doesn't understand what the underlying asset he or she is transacting with, they're not going to purchase it. But even you're talking specifically on an institutional level as well, which is, founders like Mike are dealing with 2 products, his Web2 business and then a Web3 publicly traded asset, which is incredible. Tell me about GEOD. And Mike has been someone you've tracked for a while. What made you say, wow, this is the time? And what's getting you excited about what they're building?
Yeah. So I first brought Geodnet into investment committee in 2022. I can't actually remember. I think it was maybe like, it was probably, yeah, it was probably around yeah, it was pre-DG for sure. It was around that time. And we looked at the business and like, I knew Mike is not the most conventional founder in like, the average guy who's like raising crypto is like 21 years old. You're lucky if they come on camera, right? I had a really refreshing experience with, call with Mike. And I was just like, this is bizarre that like you fully understand every aspect of this market structure. You have more domain expertise in positioning than probably anyone in the world. And you're so clear-headed. Like, he had been so methodical about every aspect of token design and emissions. I was just blown away. We ended up talking about an IC. We passed because at the time we looked at the market size for positioning for GNSS corrections and kind of like the total size of the market. And we were underwhelmed by the numbers. And we were like, okay, we're taking on a ton of execution risk here. There are some very large publicly traded competitors. We need to see a little more evidence that Mike's going to be able to go out, build this network, get customers, keep them, remove churn. So fast forward 2 years from when I brought that in. At this point, a lot of my friends at other funds and such have started putting on positions in Geodnet. And every time one of them does it, I'm just like, wow, I need to pay more attention. I need to pay more attention. And then Kyle calls me, I think it was in like July of 2024. And he's like, what's going on with Geodnet? And I remember looking at Dune at the dashboard, and this thing was just like vertical. Like just in terms of tokens burnt, it was starting to go vertical. And we were like, all right, something's changing here. Something's happening. And ultimately what had happened was, one, Mike is a genius at taking big expensive hardware, making it small and cheap. Okay. We didn't know that when we initially looked at the deal. But it turns out that just like all of the work he'd done to like make the base station small was no one else in the world had done that. And then obviously we know this from crypto is like you give people money, they will do the thing that you want them to do. He got base station set up. He covered 80% of the addressable world, I think in under 18 months with like sub 10% or like it was between 5 and 10% of the token supply, which like, if you think about like how efficient capital, build outs can be, it was like definitely up there in terms of like how well he had done it. So he now has all this footprint. He's able to start serving the network. And he has now started, like the enterprise motion was working. He had like started to onboard those customers, and like he was explicitly taking customers away from Hexagon Trimble, keeping them on and giving them like an order of magnitude lower prices. It is like all of the things that we talk about when we go to our LPs and we tell them like this is what DePIN is. There's no clear instantiation of that. So candidly, like that was sufficient. That was enough for us to put the position on. I mean, we did this it is in our venture fund. It is not in our, like that specific investment was for our venture fund. And if something goes in our venture fund, we're underwriting to an extremely high degree of return. We want skew there. That's not just like 2x. Like we need this thing to like 200x. And the thing that really kind of like set it off for me was thinking about physical AI, just like thinking about how many robots there were going to be, how many drones there were going to be, how many humanoids, how many rovers. If you believe that there are going to be these like autonomous vehicles in particular, right? Like how many Waymos and Tesla robotaxis you're going to find around there, which if you look really closely at some of the people that, Mike is already selling to, a lot of them are selling to a lot, I can't say specific names, but like basically everyone that you would think of as like players across all these domains that I've been talking about, Mike is already selling to them. And that's only going to compound when you have, 10 million drones or, 30 million autonomous vehicles all over the world. And so that tailwind just like made it so clear for us that like we need to be in business with him, and we need to partner together. We need to figure out how to tell this story. We need to clean up, a lot of the core things that have been stopping it. Again, like as a DePIN asset, there are some structural headwinds there. We need to get like, they need to figure out how to get more liquidity. They need to find more venues to have that. And so these are all things that are like active, ongoing discussions. And I think we're going to find a way. I think they're going to have a really big year in 26 and 27.
You also published the GEOD report as well. What's your quick review on that whole thesis as you look back? What is it, 9 months on?
The price targets that I'd hit didn't end up hitting. It shouldn't come as a surprise to anyone reading this or listening to this. What I will say is that like my conviction in kind of the structural layer of the stack they're in and how kind of core they are, in terms of providing, what I think of, and I think what everyone else in the business thinks of as a mission critical service to Solana. I candidly think the GEOD team, both labs and foundation, are doing such important work for the stability of Solana and frankly getting paid for it as well, that, I feel very, very confident in like the core thesis of that article. Obviously, what we got wrong there was the specific growth rate that we assigned to REV, the specific growth rate that we assigned to kind of the multiple in Solana terms. But in terms of like, you talk to anyone who is a founder building on Solana, right? Anyone whose job it is to take a transaction from their end user and make sure it lands on chain. The one thing they care about is like, how do I make sure that the user that I'm trying to serve is getting the fill that they think they're getting, or is actually able to interact with this network in a way that doesn't lead to that pack that's being dropped, or getting substantially worse quality of execution. The kind of hold that they have on that market right now is a net good for Solana. The fact that like you can go to an RPC, service provider, an application builder, a user, and all of them can say, let's send this as a Geo bundle and get there's no deterministic guarantees around transaction landing anywhere in the world, but like a very high probability of inclusion and ordering. That's critical. And as you see more activity, as you see more REV, that's going to continue to compound. Look, there's obviously things changing at the protocol layer. For the sake of being intellectually honest, right, there's going to be more competition, and we're heading towards a world with ACE and MCP where the role of the block engine may not be what you think it is, right? Which is not to say that it goes away entirely, but as the protocol starts to internalize more and more functions around application control sequencing and becomes more opinionated about transaction landing and ordering, Giro is going to have less and less of an important role. And we are candidly eyes wide open about that. We just generally believe that the team will provide critical services in the interim. So for instance, even Giro building BAM right now is a way for the protocol, for Solana, to achieve all the things that it would in an ACE world and an MCP world, or like get closer to those kind of like, those goalposts with what is like a stopgap, like quote unquote band-aid solution right now. And it's necessary in order to like have the kind of UX that you would, feel is needed to compete with counterparts that are, are offering execution venues with, potentially higher, with lower latency or kind of lower, superior performance expectations. So I think Geo is continuing to do really important work. I think there's going to be a path towards them continuing to generate huge amounts of cash. The DAO and the foundation are extremely well capitalized. They continue to be direct beneficiaries of REV going up on Solana. Nothing about my thesis has been invalidated. We just know that the core protocol is going through certain changes. But like I've known Lucas and Zano and Brian, and that team is just like, I don't know why you would bet against that team. It's like they are so clued in to what needs to get built and able to like ship it so fast that I feel really good about them.
Let's flip it the other side. We've been talking a lot about what you believe in. What do you think the market? What's overrated? Like an overrated product category, and why do you think it's overrated?
I mean, look, it's super popular to like dunk on meme coins. I'm gonna do it anyway, just because like just because.
Let's do meme coins. I'm gonna let you do meme coins, and then you have to say one on what are other asset allocators interested in that you think is overrated. Do one on meme coins.
We'll do meme coins first. It's funny, people will talk about like hyper gamification, and some people will say hyper gamification with like this breathless concern of like, what are we doing? We're like, this is awful. And then there's other people who will think about hyper gamification and be like, this is great. This is amazing. This is the best, the best thing that's since sliced bread. And this is PMF for crypto. Look, I don't take either view on it. Like, I think this is technology. Technology gets used in ways that it needs to. I think we've already shown that speculation is what, is a use case. I think it's time for us to like move a little bit past that, and I feel like meme coins as a quote unquote meta have not really changed at all in the last 6 months. Unless I'm completely missing everything. And like, I don't think I am. The dynamics seem to have stagnated, right? And so, maybe people aren't funding new launch pads and like new venues and things of that nature. But I really just want to see the same. If you like look at the average, meme coin alpha chat, the instinct you see there is very similar to the instinct of like someone trading like, gold on leverage, or like the CFD guys trading Forex, or like you go to like, StockTwits and you like talk about, see the way they think about like putting a 0-day option position on before earnings, right? Like that core instinct, a lot of intellectual capital and engineering capital has gone into making meme coins like, a robust trading experience. I just want to see people do that for like assets that are like slightly longer shelf life. I'll stop there. But like, I think, people aren't really funding that much stuff anyway. For what other allocators are spending a lot of time on, I'd say like the canonical, I'm in trouble for this, but like the stablecoin L1 thesis has never really made any sense to me. Partly because like, we as a firm have a very clear view on like what makes L1s valuable, which is MEV. And if all you're doing is payments, there's not going to be a lot of MEV there. And I just like don't know what makes it valuable. But also just like, haven't we learned from the last 5 years how powerful, last mile liquidity network effects are? And like, I really think Tether and Circle are in really good position to continue dominating while a bunch of long tail stables try to suck the air out of the room, against each other. And so, yeah, we haven't done stablecoin focused L1s for that reason, and I'm not particularly bullish the outcomes there.
It's a freaking popular trade, my God. Last time we did an episode, the BitRobot one, there was a few people who sent me some different format ideas. We're gonna play a quick prediction market game, whether you're long or short, and I'm gonna give you some categories or some tokens, or you can abstain because you are a licensed financial advisor. Okay.
Oh yeah, I will have a disclaimer for you to read later, but we'll.
Yes, exactly. At the start, you're gonna. Council has sent me a big take this freaking episode offline, but maybe not long or short. Maybe just share an opinion. We're gonna iterate. Earlier this week, AAVE had a few problems with governance. Stani is obviously PvPing against the DAO in a few different areas. Your general sentiment in terms of what you think on this, maybe on the asset in particular, whether you remain excited or you're cautious on AAVE today?
Yeah, I don't think I'd say too much about like our position or things of that nature, but what I'll say is that like this seems like the beginnings of a win for token holder rights. Like these types of discussions are painful whenever there's like dual equity token structures. The reality is over time, if there are incentive misalignment, if you can see clear incentive misalignment, it has to get revealed. Otherwise the market, kind of comes after you. And I'm happy to see it happening in this way because for the longest time, there was candidly just like no accountability, around like what token holders should receive, what token holders should not. And if anything, having a clearer discussion about like, here's what we believe, the DAO has claims to. And like, look, Giro's had to navigate this itself, right? Like going away from, tips going to labs to eventually being, entirely ported over to over to the DAO. Which is again, not to say that like the equity should go to zero in all cases, but I think you should be very clear about, and this is again a comms and investor relations exercise, which is like, as someone that is running a public company, your job is to communicate very clearly about what this asset is. And, if there is pushback around it, you have to find a way to navigate that. But, ultimately it comes down to just like people becoming much more opinionated about what their tokens are worth. And I think these types of discussions ultimately end up strengthening the asset in the long run. It's going to be murky right now. It's like obviously not the best press in the world out there right now. My guess is when we look back on this in like 2 months, people will think of it as like something that hardened the network.
Crazy to see it play out in public. It's like a boardroom fight, or like a annual shareholder meeting and people are like live tweeting their position.
We're leveling up. There was a time when like people were happy to see assets that, do nothing, produce no cash flow, internalize everything, trade at several $billion, and like nothing showed up in the token. And I used to like look at the market structure then and be like, the fuck is going on? Like how is no one saying anything? And I think we are now in a position where people are much more accountable, which again, as market structure improves, as markets get more efficient, this needs to happen. So it's good.
These are also core beliefs of Multicoin as well, being long-term oriented. You kind of need some of these teething lessons. It's kind of like you can't keep protecting your kid from the world. You got to let him scrape the knee a few times, cry. You got to cry, man. Let it out. It's okay. You'll get better. Can we talk quickly about DeSci? I think there's a lot of I think the general sentiment on the street is on the public market side, not that many interesting names. You have Bio, RSC, but certainly one of the most important, I feel like, verticals. I had a discussion with our partners, and it's, if you're long robotics and AI, you got to be long longevity and humanity. And in crypto, it's like, wow, we're not leveraging, decentralized capitalism, decentralized intelligence at all. And that seems like a shame. Even on the private market side, we've seen a few names like Andreessen funding Amino Chain, and I know Pantera and Modular were involved in genomes. What's your take on all this? I'm not sure if you guys have done anything in science. Maybe you have.
I've spent a lot of time with a lot of teams working on. We don't have any active investments, I'd say, explicitly in DeSci right now. I remain extremely optimistic that something interesting is going to come out of this, both in the form of, the classic like N of 1 style clinical trials that you see in things like HERDAO, all the way to, just like better incentives for producing research and doing peer reviews and things of that nature, like up and down the stack in terms of science. I think there are ways that crypto can be useful. I think part of the issue that we've seen is like, we haven't really seen a very neat end-to-end kind of like incentive structure, being fit correctly to the process of like either making a new drug or, funding some sort of new breakthrough. We just haven't seen that map correctly yet. You're going to eventually get to a point where the right sort of entrepreneurs end up taking the risk and using these rails for those things. We just haven't seen that configuration yet. I candidly spent a lot of time last year working with, as a quick side note, I've been obsessed with this idea of like brain-computer interfaces, and you think about like the core problem in the devices, the hardware around that is a data problem, and you see a very clear flywheel around like, can you run exercises? Can you scale the data collection process across a variety of sensors? Can you make headsets cheaply enough to capture, whether it's EEG or FNIRS or like whatever the type of data is needed? And I think you're going to start seeing, certain, a set of teams kind of go after that market soon. So we can have thought to text in production pretty soon. But anyway, no, so I remain extremely optimistic the sector. We need like real, like A+ founders to go after it. Not to say that there aren't those out there, right now. But we just want to see like a much tighter loop there. And I think it's coming. I think it's going to show up.
Yeah. The investable universe for DeSci is, I think we saw in the AI run up in Q4, I think most of them were grifts, primarily because DeSci is such a retail sexy narrative. So is humanoid robotics and 10,000 robots in your country roaming around. It seems like the debate is it's either Web 2 comes into Web 3 or Web 3 needs to grab Web 2. And so in this case, if you're in Web 2, let's say, pharma, the game theory is there's a lot of structured capital around this. Biotech stocks are going through the roof, and you have things like ABSI, ABSI, who are just doing this like AI-driven drug discovery, and all the capital in the world is flowing over there. So if you and I are some science entrepreneurs, just go to Web 2 and raise your financing. It's the same as Web 2 AI. And so why do you ever need crypto, I suppose, is exactly what we'll probably need people like Multicoin to figure out in terms of how we unlock new business models, because ultimately they don't need to be here. And so if they don't need to be here, they have enough financing, they just won't come here. And so you need someone like a Web 3 entrepreneur potentially to come and drag them to crypto potentially. I'm not sure.
Yeah, look, it always used to be the case that your cost of capital was cheaper via crypto public markets. That is now explicitly no longer true. And like, if you look at the price charts of any new asset that's come out over the last 24 months, you will know that that is not true. And the question is like, what are tokens good for? And I think it's the same answer we've always had, is like, these are markets and you can use them to coordinate incentives. If the incentives are designed well and you actually produce something meaningful in the way that Helium has or Hivemapper has or Geodnet has, there is something that you use crypto rails for in a way that you could never, ever, ever have done over Web 2 rails. You would never have been able to build out those networks or create those cults, those followings. I think there's real power to that core principle. It just needs to be applied in ways that are novel and compelling for DeSci. I remain super bullish on, N of 1 clinical trials. I really want to, work with someone who's doing things like that. And then just, broad scale kind of like data aggregation for drug discovery, for testing, for new kinds of science. I think there is any problem that requires scale, that requires like distributed contributors all around the world, and it requires them to kind of like, do things fast and quickly. I think there's like room for crypto to help out there.
Riffing with you for a quick sec, I was tracking Pfizer's acquisition of Metsera, who's doing this obesity drug, and man, the story of Metsera started only 4 or 5 years ago. It was they raised like $500 million to go and hunt globally for promising weight loss drugs, and eventually TLDR, Pfizer and Novo went on a bidding spree against each other. That deal finished at $11 billion 4 or 5 years on for Pfizer to get their hands on an obesity candidate. And the only reason they were able to do this is essentially Pfizer outsourced their R&D to Metsera, which is instead of developing a weight loss drug for themselves, they had to go to a private equity holding company. I mean, Vivek did his version of this, Mark Shkreli did his version of this, and so it's like, again, there's so much money flowing in Web 2. Like, and we're also targeting one of the most heavily guarded industries in the world. And so it's like, man, outside, it's really hard to disrupt this from the outside. Like an open source community like this, contributing to drug discovery, for example, like CT, clinical trials. Oh, toughie.
We've seen a handful of founders that I consider to be A+, try to go after this exact thesis. We'll have to figure it out. We'll check back in like 6 months and like see where they've netted out, right? I do think it'll be interesting to see people who are willing to, essentially not come to crypto thinking that they're going to get a lower cost of capital, but come to crypto because they feel that they can do something that they could not have done over traditional rails. And like try and attain scale that they can't do over traditional rails. Because like, look, the quantum of if you have infinite money, then all this stuff is like worthless. But like even so, it's hard for a lot of these guys to have infinite money, and that's kind of what it is, right? Like you may have this venture style economics happening across these large biotech companies where they are, incubating and they're essentially doing the same thing that private equity shop would be doing. And you could make the argument that there is, an intelligent kind of like selection process happening there. But there are always things on the fringes. There are always things that are neglected by that capital funnel. There are always things that are, that don't come into that aperture. And I think there will be like some credible shots on goal across these in the next year or so.
I love it. Shayon, I'm so grateful for you to take some time to come jump on the pod with us. Anyone who would like to follow up with Shayon, he is Shayon Sengupta on Twitter. Actually, just go to Multicoin blog. This guy posts a lot and it's all high quality content. So just go directly over there. But Shayon, thank you so much for jumping on the show, brother.
Thank you very much for having me, Jack. It was a lot of fun.